Is another sell-off looming? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Dale Pinkert, trading coach at TradeGateHub. Hi, Dale. It's great to have you back on.
Good to be back with you, Maggie. Sell in May and go away.
Yeah, well,
Is that going to work? Is that going to work this year?
I have a feeling. I think we all kind of feel like it's not. But it is fantastic to have you back on. And hello and happy Friday to everyone watching live on YouTube and Substack. I'm glad you could end the week with us. Please be sure to subscribe on whatever platform you are joining us from. Help us battle the tyranny of the algorithms, please. We appreciate it. So
Walk
Dale,
in the park.
a walk in the park. That's right. Hey, Dale, very interesting action today. We had broader stock markets rally on a better than feared. I don't even know better than expected, but there was a lot of concern around the monthly jobs report, given everything that's happened with tariffs. Came in solid, so we saw stocks take off, but we also saw Treasury yields rise, which I know is something that you're watching and are concerned about. So let's kick off with TLT. What are you seeing there?
Okay, well, TLT, it's kind of like a Rip Van Winkle market. You could have put a trade on a year and a half ago and wake up and here we are. It'd be Groundhog Day. Anyway, okay, let's take a
Except
look at
it's felt a
TLT.
lot more stressful than that, right? We're back at
Well, I
that
mean, if you
level,
look
but
at the weekly chart, which I'll bring up right now, really, it's been completely sideways for a long time. Okay, this is a daily, but let's get a little bit more macro and take a look at the weekly, and you'll see what I mean. So, I
yeah.
mean, look here, we're going back to, this is 22. And then when we got to 24, basically stuck in a eight handle range with a aberration here. But for the most part, and you know what? I'm hearing a lot on media when analysts are interviewed and they're almost like feel proud or smug. Oh no, I'm in bonds because it makes them look smart, like they missed the 20% sell off in S&Ps and now they're missing the upside too. They've missed the upside in gold. And I know a lot of people who've been looking for a bull market in bonds for a long time. And uh, I think that there's a problem with this, especially if we take out the 85 level. Okay, 85 is going to open the door for a retest of new lows and probably even higher. And I think people are they're not, I think they're on the wrong side of the boat because I don't hear a lot of people talking about higher yields. I'd say that majority opinion is that yields are going to start dropping now, and this is not. This would bother me if I was a dove looking for lower interest rates in the 10-year
Mm.
and the week that TLT put in. I don't think it bodes well for lower rates. So I think there's a problem with finding buyers. And then this was really kind of a surprise, Maggie. When we think about the tariffs and we think about the trade war, um, at least I do, I imagine these big, huge container ships and they're bringing goods in. So that's what it's going to be about. And a majority of it will be. But I read in during the trade negotiations, or Japan has stated that during these trade talks and tariff talks, that the 1 trillion in U.S. government debt that they own is part of the negotiation. In fact, I think they did some selling a few weeks ago, and our president wasn't real happy about it. So
Yeah.
we have enough trouble with new supply. Old supply coming on the market would be a problem, and the yen's been pretty strong. So you could understand how they may want to repatriate rather than the yen. Is gaining ground on the dollar. They'd rather be in yen-denominated assets than U.S. dollar-denominated assets. So
Yeah,
there's a lot of moving parts here.
there are a lot of moving parts. Couple of, interesting points that you just brought up. If there's, it sounds like you're saying that there's a lot of factors that are going to keep upward pressure on those yields, downward pressure on prices for those who are looking for a bull market. Certainly, we know the administration wants lower interest rates.
Mm-hmm.
We also have the Fed meeting, and we had this jobs report that was solid today.
Yeah.
That kind of creates a quandary for the Fed, doesn't it?
Well, I was speaking to Pedro da Costa, who used to be with the Wall Street Journal, now he's with MNI, and he used to grill the Fed guys in the room. And now he doesn't go into the room. But he told me that there's talk between Fed governors that some of them not knowing what to do, until we see what really goes down with these trade deals that most take throughout history 18 months to complete, and there's always speed bumps that they're going to get done in 90 days and there's not going to be a problem is, a little difficult to, more than hopeful, okay, is the way I see it. So, um, all that aside, all the fundamental banter and narratives that I've just talked about for 5 minutes, they're nice to like give you a bias in the market and look for opportunities in the market. But this was strictly a technical trade. I didn't get onto it until after I saw this break. When things do things act unusual, and the bonds were selling off, even though the market was selling off too into the lows. So we had a down day, and the bonds were still crashing. This is a day that the Fed came in and made a statement only, that they will be a liquidity provider. What
Mm.
that means, I don't know. I don't think they're going to lower rates, but they could be doing quiet QT. They could be doing something. They cut back on QT um, on for treasuries, but they haven't cut back on MBS, which that's another story coming down the road. Real estate looks pretty, like Wile Coyote-ish to me.
Mm.
So, so I saw this, and I go, you know what? We've knocked on the cellar door so many times. It's the third time. And each time the first time we had a tremendous rally off that level. So this is a little tech 101 for our viewers. Okay, so this was a nice rally. It was a beautiful rally. And this was pretty good too. Okay. But this from the last hit at 85 has been shallow to be complimentary. And this 85 level that was defended, I believe, by the Fed, and then our Treasury Secretary said that the Treasury will buy bonds, that they are set up. But it was a story. I don't have all the details, but we're going to be there if we need to be there.
Mm.
The bonds popped on that a little bit, but then sold off because the market probably said to itself, like I did, what are they worried about? Okay,
Mm.
so I think that a lot of markets are going to be tested by higher rates that they're not expecting. They believe we're close to an easing cycle, and maybe the short end of the curve that the Fed could control may drop. That doesn't guarantee long-term yields will drop. You could have a steepening with the short term dropping and the long term yields rising or not dropping at all. So I don't like them here. I think there's going to be a capitulation move in the bonds into July, and but I always know where I'm wrong. And if we close over that 61.8, that level that I pointed to on the daily, so call it 90. We close over 90, I'm gone. Um, but this looks like a bear flag to me. That's technical analysis 101. Hasn't broken down yet. The technicals look bad to me. There's a market message that they sold off and took away all these gains. Look how many weeks it took to accomplish this,
Mm.
Maggie. And in 1 week, those gains were erased. And we
Yeah.
know that there's a lot of banks that have duration risk. So this won't be a good thing for banks either if yields start to climb again and the bond market's under pressure. So I think
Yeah.
that's the most concerning thing. It's a much more concerning chart to me than equities. If you want to move there, um, you
Yeah,
know,
I just want to say before we transition,
okay,
that's a fantastic thing to point out and start with, because a lot of the headlines today are going to be about the stock rally and the fact that,
right,
through this month and as we start May, that the stock market made up all of that tariff
yeah,
tantrum, or whatever you want to call it, all of the fear and the sell-off related to, so that is going to be the lead everywhere. But I think you just pointed out a really, really important thing underneath that we need to watch, because we know that treasuries are where the concern is for market watchers, experienced market watchers. And we also know it's something that the administration responded to when we saw those yields spiking. So this could be a
yeah.
really important move and an unexpected one, as you point out. So
Well,
what's the knock on for stocks? Because we have this sort of heading into the weekend with this sort of good feeling that,
yeah,
like, US economy is pretty resilient, jobs are holding up, the earnings were good, not too many scary things were said, and now we're back.
okay.
You buy
Uh,
that?
well, my original thesis off the megaphone formation was a peak at 61, break to 4,800, and then a rally to new all-time highs. Okay, so I thought it was too fragile to buy here. I I didn't participate in this rally, so I'll tell you why. There were a few reasons why, and I think that if I covered up the title of S&Ps right there and just looked at this chart, I would go, well, wow, this is a nice rally to sell into. So
Mm,
again, that word tactical, we could be going to 7,500. We'd have to close, I think, back over 6,000 to do it. But it's not like I'm saying get short down here. I came on here, said I'm neutral to bullish. Okay, I was bearish a dollar. I wanted to see what the rally looked like. So I think there's a chance that there is could be a wave two, which implies another decline.
mm,
It could be a B wave. This is A, B, and we still get a C, enough to panic out the 4,800 bulls, maybe trade down to 4,500, which I have another black line there. Must have been a big level. So I think there's a possibility that we have a shakeout. I think there are a lot of people looking for a sell off into mid-May for an important low. I think it's possible that we head lower until the summer, and then we start to rally. Maybe by then, the bonds have done whatever damage they're going to do.
mm,
People will be bearish stocks forever if we take out 4,800. That would panic people. So I'm open to it. The reason that I'm open to it is part of what my work says. So here's your daily. So here was the crash. Okay. And here's the RSI. Now there's no divergence. Okay. In fact, it confirmed the low from the prior decline low. So there's no reason to buy it based on momentum.
mm,
And markets usually don't bottom when momentum is confirming price. Same scenario in NASDAQ, confirm low. I have lots of examples of confirmed lows. I know you want to get to Apple. Most of the Mag 7, they have confirmed lows. See this reading in Apple? It
mm,
was 20. Markets usually don't turn with a 20 reading. Here's Amazon. Amazon had, at least structure where I have to look to see whether or not it made a new low. So it held up better, had better structure. Meta confirmed the low, and we're not even 50% back. I don't know why people are giving it the all clear because of what's happening. Google broke, $70. So uh, we're not even 35 back. So I don't think it's an all clear, and I think there could be one more shakeout. And there are things I like. I would buy semis in July. I'd buy miners. I'd buy everything in July.
Well, let's all
Okay.
right. There's a lot to unpack there. Let's back up for a second. First of all,
Oh,
so you
I feel like
think
Kramer. I feel like Tracy Kramer. No, go ahead, Maggie.
so you feel like that we could hit a lower low than we saw in April. You think there's a chance we could actually make a new low.
Yeah, yeah.
Okay.
So I'm willing to stick now. I'm looking for. I'll just show everyone why I'm looking for that level. Let's see. Just the S&P. It's just a measured. It's a measured move. So do I have my charts up? Oh yeah, here they are.
Yep.
Okay. So if I want to change it, I just go um,
And
S&Ps.
while you're doing that, I'm just going to say that, I think it's very timely to be looking at levels and charts right now because we all know that the headlines are so uncertain. And while you're walk us through what you're seeing here, but I'll just bring up a
Okay.
question, which was that the market's pricing in a tariff. This is from Eccentric. The market's pricing in a tariff deal. Does that mean once the tariff deal comes in, it will be a sell the news event? Or
Yes.
could we see a spike? So on that, tell us what you're seeing level wise, and then talk a
Okay.
little bit about what you think in terms of the kind of reaction to the headline and
All
how
right.
that might play out.
And 5100 was only a week ago. Okay. You could have bought this dip, and there was reason to buy the dip ABC, and it turned out to be an ABC. So the move from this low to this high was 4800 to was 800 handles. 800 handles from here gives you about 58, 5900. So we're heading into the zone where I'm going to be trying shorts, and Apple will be one of them. So
So okay, so Christopher, so you're going to try to short Apple. So the last time Christopher asking for an update on your Apple view, you were looking for $150 as being possible.
what a
Um,
memory this guy has.
Dale, people pay attention when you
All
talk,
right, yeah,
and
that's what
and you
that's it. That's what I'm looking for.
okay. So you're
Okay,
sticking with
so
that.
it's a pretty classic textbook Edwards and McGee pattern. 170 was my first target, which is what it got to, and then we rallied back halfway to about 214. What's the high here? To 14. So I mean, it's a classic. WD Gann would say sell a 50% retracement of the first wave down. So that's where it got to. And if I pull up my weeklies, you'll see why I have a speed line there. And I've had it there for months. And here you go. Here's your 150 comes in here. And, this would be if it's, equivalent to this break, 90 bucks, takes it down there, maybe even lower. But 150 is a good target. I commend the guy on his memory. I hope he didn't wait for 150 if he was
Oh,
short going into this,
well,
because
he'll let us know, but Christopher's
yeah.
pretty experienced
All
himself,
right,
and he's a lockbox when it comes to this kind of stuff.
all
So,
right.
as
So I
our
mean, look at the week Apple's having compared
mhm,
to most of the others, like Amazon's up and
yeah,
Meta's up. So Apple, with that news yesterday of writing off $1 billion, and Chris knows I've been bearish Apple mainly because of the adversarial relationship growing between us and China. So it's in full bloom now. In
so
fact, I think they want to, they want to move their production to India, but the things that they need for that production are manufactured in China. So China's not really working in a hurry to help them move their plant from China to India.
I mean, the timeline on what needs to happen with supply chains versus the news is no matter where you look.
They're
I mean,
jinx, and they want to go to India, and now there's tensions between India and Pakistan.
yeah, I
So
mean,
stay
yeah.
short, Apple.
Uh, Want to ask you about Uber because I know that's on your radar too while we're talking tech.
Yeah.
And you
Okay.
tweeted about that. So
So
what do
this is
you
a
got on Uber?
darling. It's a darling. Why? Because it held up pretty good into the crash. This was the crash, and it came back right away. I mean, the short-term technicals were good, but I want to warn people it's a popular hold now, right? So, there's a 4 hour, but this was the reason I wanted them to see it, is that we're approaching a third drive to a top here at about $90. Now, sometimes it'll blow through on a throwover, and then you just wait for it to come back inside the formation to short it. But I would be using this. You can see on the weekly, it's kind of what the S&Ps did. They were diverging for months, and Uber's last confirmed high was February of 24. So it's been diverging, probably distribution. High risk traders could try shorts there, and
Mm,
conservative traders, it's at least a liquidation. Take your profits. It's not a profit till you take it.
that's
And
right.
then,
Never were truer words spoken.
yeah,
What about NVIDIA? You mentioned it briefly before when you were talking about the S&P, but I know it's really widely held, and we will get to gold, folks. That's coming up. But
okay.
what about
Yeah, I
NVIDIA
really want
before
to
we?
show the gold silver ratio, but yeah, gold too.
Yeah.
NVIDIA, I've been looking for a rally to about 123, 124 up here, and I'll attempt shorts, be wrong over 140. But I think there's one more, and this one really didn't have a bad setup. Um, we did confirm on the 4 hour down here at 84. See that? I mean, really was intense, intense selling pressure. It was almost like turn the machines back on. Remember that, Maggie?
So
Those
so
guys. Turn them on. All right. Anyway, yeah. So here's
was
a
that trade
confirmed
was
one.
that
The trading places.
yes,
Yeah.
yes, a famous, oh my gosh,
Yeah.
so many good scenes from that.
So
Uh
I'm just looking for one more low. I'm not looking for a crush, maybe 80, 75
right.
from 124. But actually, you know, if we don't get a break to new lows and all this S&P is, say we correct this recent bounce, semiconductors are going to be one of the groups that I actually like for the melt up phase.
And that
So
melt
the
up is
takeaway
in the
is we're going
summer.
to have a melt up. Has it begun, or is there one more shake of the trees so that people miss the whole thing until we're at new record highs? So
Mm.
that's a question. Is bond weakness going to be enough to take them down, or will it be like 87, Maggie, where yields were going up, the dollar was falling, but the market in 87 kept rallying. It's called disintermediation. So you had the stress of higher rates and then overvaluations occurring simultaneously, and then it just snapped
Mm.
in October of 87. So you could have, like, and we've lived through it here, where we've seen a bear market in bonds and a bull market in stocks.
Mhm.
So that's possible
Mhm.
for a
That's
melt
why
up.
these levels are gonna be really important to watch.
Yeah.
Before we get to gold, you mentioned the dollar really quickly. What are you expecting for the dollar?
I'm currently long. It's become more of a two-sided trade, but for people that are dollar bears, I think there's going to be a nice buying opportunity in the euro around 111 or so down here for one more move to 117,
Whew.
maybe 120. I think you could buy cable too, 131, 130. And the Dixie, I'm looking for 101 and a half about in here. And then I'm looking for one more low to 96, 95, and that'll complete this whole first wave down, and then we'll have a better rally. But it'll be under this low because here's again this RSI divergence at the lows that we had last week. And you notice, remember I said that risk on would be with a stable dollar?
Mm.
Not with a weak dollar. A weak dollar is going to be risk off, repatriation. That's what it was. So if we rally up here and then we have one more dollar sell off, that would tie in with a potential sell-off in equities. And the other thing that you could use for a couple purposes is the last time the gold silver ratio blew off like this, they were both on big risk off days because people want to buy gold and they're worried about silver because of the economic consequences of what the stock market is saying, fear of recession. And to me, it looks like we've either topped or, like I'm saying, maybe one more break in bonds and it takes the market down. A formation that people that have followed me for a while know I love. The number of completion is 3. Is that we could get one more rally to new highs in the gold silver ratio with a little bit of fear on the street, and that's how I'll be timing my silver longs off of this occurring here, because
Mm-hmm.
I have conflicting counts on the silver itself, but I have confidence of what to do if the gold silver ratio makes one more high.
So that gold silver ratio is an indication that there's fear. There's fear in the
Yeah,
market and that things are either breaking or selling off.
yeah,
Uh question as we're so that's really important for people to watch because that can give you an
it
indication.
is.
You've got two scenarios here, Dale. What market is the lead in terms of watching which one happens? What will you be will you look at the gold silver ratio? Is that going to be the
Yeah,
kind of canary in the coal
I'll
mine?
I'll,
Is
I'll
it
be paying it.
treasuries?
Yeah, yes, them too. And the dollar rally ending and heading down. So there'll be like, a confluence of markets coming together for something like that. But I'd say this is pretty important because this was a breakaway gap when the market started to get killed, and people said, "Give me gold at any price," when you could have just thrown your charts away for that parabolic run we had in gold.
Mm,
And I do think that gold has peaked. I know the RSI is saying no, but I think down the road, June, July, we could be looking at 2,700.
really?
Yeah. So,
So that's very interesting because there's a school of thought that this is sort of the era of gold, as we see all these geopolitical tensions and, it may or maybe you agree. Is that 2,700 seems like a big retracement? Is it backing and filling and an opportunity to
yeah.
get in at that level
Yeah,
and then it goes
27, extreme 25. Yeah, but the gold silver ratio topping will say the gold related assets, including the gold miners, outperformed the silver miners. But if we get this top up here in the gold silver ratio, I'm looking for a big move to the downside, and that means silver's going to outperform for a long time. So I think this is a big trade, and you'll want to own the silver miners then as well
so
up there.
silver, the commodity and the silver miners.
Yeah, yeah, I think silver is going to have a big year, and the silver miners will more than gold. Gold will do okay, but silver's going to, I think, outperform. This is a big trade for me this year to see this turn and use this as a buy signal for silver and silver miners.
So, and do you when you do that, any consideration for folks in terms of how to express that? Do you is through ETF?
I'd express it the most conservative way would be to, if you have an honest bullion broker and they don't charge you too much for spreads, you could give them an ounce of gold and get 110 pieces of silver. And if I'm right, and silver, that ratio falls to 60, you've gained 50% on your metal investment without doing anything except exchanging expensive gold for cheap silver.
Yeah, sort of a reallocation within
Yeah,
that metal, which is,
yeah.
again, not something
Move,
we
yeah, move
are
heavier towards silver.
mhm.
For traders, the silver miners are and futures and silver related um, assets. So, um, yeah, I think that this should be the wave that we get to above 50 towards 70 or better. And again, I'm thinking June, July. So I think a lot of things are going to just. Sometimes it's right to not own anything except cash. All right,
Mm.
and because if you're sitting on cash, it has more buying power as these markets decline. Okay, you may be losing foreign exchange. You may not be in the right paper, but I think that you're going to be able to buy a lot of things cheaper in June, especially if I'm right about one more decline in the market,
Yeah, this is
because
such
that'll
a
take everything with it.
this is such a great sort of contrary, I think, to the headline conversation, to the headlines that are crossing today. Just a note, because I want to ask you, we got a question in here. Just a note for anyone, I know we get these questions all the time, because your traders may have access, but if you want to take a closer look at your gold or silver holdings or increase your exposure to metals, one avenue to do that, if you want to look into it, Hard Assets Alliance. It's a platform with over $3 billion in assets. We put a link in the description and we'll drop a link in the chat. Please note this is an affiliate link, so we will earn a small commission if you click through and open that account. But it's a good place if you need to do some homework to maybe start if you do not have access to something like that already. So Dale, okay, people, there's so much fantastic information. One more question, and then we're going to recap, because people, I can tell, they're scratching away with their pencils and taking notes as best they can, but we're going to try to circle it around for everybody as we close out. Before
Relax,
that,
everyone. It's recorded.
it's recorded, right? You can go back and we'll have chapter notes for you all.
Anyway.
But Akash is asking, is the price of oil even worth looking at right now? I feel like the Trump administration wishes to put a floor here for the oil price.
I'm viewing this as a possible double bottom. So I think it's worth a shot. They're not talking to the Iranians. I got this right, but all right, I stayed with it. I still own it. I had doubles on those options from, I guess I'm a human being, and I really did think that there was going to be a military strike.
Mm.
But I look at the chart now. Yeah, it could crash and the bears could be right about 40, but I wouldn't be short oils. And some of the oil stocks actually acted better than the oil. I think it's a low risk buy here with stops under the crash low of 54 and a half.
Dale, you may say you're human, but Andrea said Gandalf has spoken. Couldn't agree more. For anyone who's a fan of Lord of the Rings,
I get carried away too. I'm
I
not as
like that.
detached. We all say, be detached, but I bite my fingernails just like everyone else out there.
So if we look at this time frame wise, June, July is very important. And we're at a juncture where we're either going to see a blow off top first, or we're going to see a melt up. But you see things turning, and it sounds like there's a lot of risk off coming, and it'll give an opportunity for people in June and July to do some shopping. But you would be cautious and short a lot of this stuff right now.
Yeah, I don't think China's going to make a deal with Trump.
You don't think they are?
No, and Vance called them peasants, and they can withstand hardship. And we think we hold all the cards. Well, get a 90-day supply of all your prescriptions, because they could pull that card. They manufacture a lot of things that we would be vulnerable to if they didn't ship them to us. So that makes me think the market's going to get, and everyone's going to get real nervous as that 90-day period begins to come to a close, and then we'll probably go over the deadline, and that'll be the bottom, because the market will have discounted a trade war with China by then. And I'm not happy about the fact I think we're going to be looking at empty shelves, and I can't get, I'm a baby. If I can't get my Simply watermelon juice, I'm not going to be very happy.
And we get no commission for that, but maybe we should try to.
Anyway, wouldn't you? I mean, people really, Maggie, people talk about how expensive things can be? How about just not available no matter how much money you have?
Well, we went through that, and I don't think anybody wishes to be in that situation again.
You mean
By
like
the way, on
COVID?
that point, for
Yeah,
anybody who was listening, the chief executive, the CEO of the Port of LA was making the rounds today. I don't know if anybody caught that.
yeah,
He was in New York doing a lot of media. 35% drop in shipments. Retailers that he talks to have about 5 weeks supply. So
yeah,
this is a super critical month. So to your point that we started with, Dale, the idea of sell in May and go away is not possible this year, because we're going to really start to see the rubber hit the road and
yeah,
find out who's really serious about negotiating and how much pain either side can endure. And let's hope, because there's pain all around, that cooler heads prevail and
yeah. Well,
diplomacy
I want to know
prevails.
who the cool head was that turned off Europe's lights.
Yeah. Yeah. What,
Don't
listen,
you? How
in
come they're not talking about it at all?
in
What
all
caused it? Huh?
because of all of the headlines, it's extraordinary that did not get as much coverage over here.
Didn't you find it curious?
Apologies to those who are sitting in Europe, where it was most certainly covered wall to wall, but we really didn't hear about it
No,
that much over here,
no.
only from our guests
What was it? A test?
who are affected.
Dress rehearsal? I don't know. Anyway, I
Yeah.
thought we'd hear more about that.
Yes, and we still might at some point, but fantastic stuff, Dale. So
All right.
anything we should leave people with? Any thoughts to leave people with?
Yeah. I know it sounds real trite that today is, today is a good day to die when you make the most out of every day. And try and do that. Be hopeful, be grateful, and you'll weather any storm.
Be
Be
present.
grateful.
Right. Fun fact, yes, both I have music on my picture in the back, and Dale, we see his guitar. We know he is a karaoke king and song music lover. But
Yeah.
another interesting fact is neither Dale or I have ever had a mint julep, for those of you who are getting
Yeah,
out there
never.
watching the Kentucky Derby or maybe placing some wagers on it. We thought that was funny, because I feel like everyone's done that at one time in their life. So one of these days, Dale,
All
we'll
right,
have to lift a
Maggie.
mint julep together.
Sounds good. Have
All
a
right.
great weekend,
Thank you
Maggie.
so
All
much.
right.
We always appreciate you, Dale.
All
And
right.
thanks to all of you. Appreciate you all. We will, of course, for those who we have so much information in here, we do write it up on Substack as well. And we'll have that out for you, so you can go back and take notes. And we'll have Dale back, as we do. And he always tracks his own progress. There's no more honest man out there. So we'll catch up with him again soon. So thanks, everybody. Have a wonderful weekend. Happy long weekend to you if you're watching in Europe. I know you have a bank holiday, so enjoy it. Take care, everybody, and good luck out there.